Good afternoon. My name's Andrew Carey. I'm a partner in Deloitte, and I'm in the real estate consulting practice, and I focus on real estate technology. So I'm not an accountant. So we have questions afterwards on the finer points of IFRS 16. You'll be glad to know I've actually removed those elements from this presentation because I didn't quite understand them. But the key thing that I wanted to say is firstly just to give an overview, and probably many of you know this, but it took about 10 or longer years for the IFRS 16 to actually arrive on the scene. There was a huge amount of consultation, but it's happened and it's happening, and actually the 1st of January 2019 is a key date where the annual reporting periods have to follow this particular standard. And what does that mean? It means something for real estate, but it also means something for every lease in terms of the particular entities. And I think that's quite an important point because there's been a lot of discussion, and actually real estate leases in certain companies, so in banks and whatever, is actually a very large proportion of those leases. However, in other industries, it's actually a very small part of those leases, but the other areas have got a considerable number of leases, and therefore property and real estate has got an opportunity to work across multiple areas, and the systems that and Paul is going to talk about, obviously, the IBM Tririga solution, but the types of systems that are capable of handling multiple leases, that's very much becoming prominent in the market. So what's the business problem? I think part of the business problem, I mean, there's huge numbers in terms on the balance sheet, and pretty much most companies, half the companies are listed companies are impacted. Particular industries have got a very heavy impact. So, manufacturing. So if you're essentially in a manufacturing facility, you might have something which is relatively small from a property perspective in terms of leases, but you have a lot of leased equipment, and there's not a lot of readiness out there in the market. There's particularly in the corporates. January 2019 is not very far away if you have to actually find all your leases and document all your leases and actually model all your leases. I mean, we're seeing a large number of companies, and that was as of May 2017, 75% of companies have not really started this process. And we will expect next year to be a bow wave of activity in this area when people realise that they need to focus on this. And I think part of the problem is that it's been on the books, as I say, for 10 years, and it is actually happening now. And I think there's been sort of the false prophet type of approach for many years that this is going to occur. And actually, it is going to occur, and it's going to have quite a big impact in terms of the way that companies operate. I'm not going to talk about the impact on the balance sheets themselves. In many ways, a lot of the accountants are looking at this as a task that needs to be done. However, there will be a whole separate topic on in some of the decision making in terms of whether you lease a property and when you have a freehold on property, and that is starting to come into the conversations. But I don't want to go into too much detail on that. So in simple terms, what's happening from in the process? There's a lease event, and it's held on some form of database. There's all sorts of interesting tools. So there's machine learning, etc. That's out there in the market in terms of transferring information from leases into databases, or and frankly, at the moment in the large corporate world, that database is a spreadsheet. And then there has to be some form of calculation in terms of the asset and liability. And frankly, the accountants are working in this space. In real estate, there are lots of different accounting treatments that you can have in terms of doing that calculation. And they have, there's some modelling tools that are out there to be able to do that. And then you work out as a result of that calculation how that works over a period of time. And then it's posted on the balance sheet. And that's one direction. The other way is that the auditors are now thinking, how do we actually check that the calculation was done in the right way, and what's the mechanism? So there's two aspects that the accountants are looking at, whether they're an audit client or a non-audit client. And then from a systems perspective, and there's a reason why the colours sort of start to fade, is that it's lease administration software, so the typical IWMS systems or bespoke lease systems that are out there. And then they are starting to move into what I would call the sort of the lease accounting engine, and that's the specialist bits of software or models or whatever that actually do the calculation for the IFRS 16, and there are some bespoke bits of software in there, and the lease administration software tools are moving into that space to be able to do that calculation. And then from the finance software, so your SAPs and your Oracles are moving in the other direction, because clearly the ultimate information usually appears in those types of systems, and they are moving back down the process in terms of the both doing the calculations and holding the data. So, what are the types of software in the market? So, on lease administration systems, there are the standalone lease administration systems, or frankly, a lot of spreadsheets out there with the information. Is that going to be good enough in time for an auditor? There's a question that on whether that's going to be sufficient to hold the data in that way. And then it's part of an IWMS and an IWMS solution, and the lease module is one part of that solution. And the challenge is that essentially these don't exist in clients. They're not fit for purpose because you have to capture the right sort of data set to be able to do the calculations. And there are systems, so global corporations have got systems all over the place and different ways of holding the data. So quite a few problems and challenges in actually pulling it together into for consolidated accounts. And then there's the lease accounting engines, which are financial modelling tools, and it can start with being essentially a very complicated spreadsheet, all the way through to bespoke tools that undertake that type of activity. And then of course there's the ERP systems that the SAPs and the Oracles of this world. So what are the options? So let's say in terms of you've got a global lease administration tool with a leading software provider, and it provides the modelling capability. So and this is one type of solution where you actually have everything held within your lease administration tool. So all your leases, and I emphasise it's not just property, so it's all your leases across your particular business. The whole calculations are done, and then they're fed into an ERP. And in that solution, often the current capability is not sufficient. Current data sets are not sufficient to be able to undertake that. So there is work to be done to actually move it to a level that you can do the calculations. And then there's the split solution. This is very common at the moment. There are lots of tenders out at the moment on this basis where essentially they're asking for. They've got some form of lease administration tool. They might have a third party. They might be with CBRE or JLL have got the information in terms of their system, or they've got it internally, and they're actually going out to market for the lease accounting engine, and to be able to actually undertake that calculation, which is, as I say, is quite a sophisticated. It's sophisticated, probably most sophisticated in my view in property. and then it feeds across to the ERP. And there are those with multiple tools and multiple leases are often coming to this type of solution, then feeding the information into a common lease accounting engine. And the third approach is you might have a lease administration tool, and the ERP, so SAP have worked in this space, Oracle worked in this space, and they have the capability of doing the calculation. And often in this case it could be that there is a policy across the business to use to be, have an ERP type solution, and there isn't a desire to have mixes of solutions in terms of doing the lease accounting and having the lease accounting engine. And then those that are SAP or Oracle wall to wall and don't want to have any other systems might go around this strategy. And this is also with some of the major global players. This is very much their approach. They do not want to have a proliferation of countless systems, so they expect it all done within the ERP system and their modules. So the question is, what's right for you, and the way to look at this. So you need to look at what technology you have at the moment, and whether you have a single lease administration system. You need to think how it ties into your technology strategy. There is an opportunity here to, if you have been, if you've been looking at systems and you require, you haven't got proper space management systems, or you haven't got in terms of running capital projects, or you want to have some information in terms of your maintenance. There is actually an opportunity here. This is one time when you can talk to a finance director, and you might get some interest in terms of those types of solutions, because the lease module and actually pulling the lease information and pulling the lease information across all their lease obligations, this is an opportunity to resolve that in one hit. So it does fit into that technology strategy. And as I touched on there, the equipment leases and technical leases. I mean, one of the things that did amuse me, I was saying to one of the guys here earlier, apparently one of the team went to a manufacturing facility and asked whether the forklift trucks were leased, and the guy said no, they're fine, they're rented. So so there isn't necessarily great understanding in terms of what the liabilities are in terms of those leases. So what do you have from a technology project? I mean, technology projects take time. Great for management consultants, not necessarily great for clients. And there are two strands here, and I can't emphasize, and I'm going to emphasize again, the data strand and actually finding the data and getting necessary data sets. To do the calculation, there are about 84 bits of data and elements of data that are required from a real estate perspective. And those aren't necessarily particularly easy to find. We find, and I've certainly found leases in cupboards and leases in lawyers' offices and leases in various locations where actually that gathering of the data is far more complicated than you might expect. Abstracting the right data and extracting is expensive, particularly if it's in multiple languages. There are some tools out there which claim to pull out dates and dollars, but the problem is, in terms of the calculations, often some of the key elements of data are within the clauses. So indexation is often within a lease clause, and that needs to be required for aspects of the calculation. So that really can't be underestimated, and some of the information that is residing on spreadsheets or on existing systems is not sufficient to be able to do the calculations. So people are finding they're having to go back and do a re-abstraction of data from their leases, and that's not just as I say, the property leases. And then working with on the technology side, working what the requirements are and working back from the requirements with the finance functions. So this is very much a business-driven project. It's not an IT project. And identifying what the future technology state is, and then developing the solution. And bear in mind that if you've got all this in place, great, and you are in a bit of a minority. Some of these projects will take a considerable period of time, and if they're not planned and on the books early in 2018, then they could be getting quite difficult in January 2019 when someone's looking for the answers. So you do need to have and look to see if this is on your radar. And finally, from me, I've touched on this, but I think it's just hugely important. And I think the other aspect, I understand that technology has been a theme of the morning. I mean, essentially, data, I think, is becoming the element that is causing the most trouble in terms of clients. The quality of the data, the accuracy, the completeness of data, and where it's housed. And people are going from moving system strategy to data strategies as well, and using, so the proliferation of using data warehouses and BI tools, etc., at the top end is also meaning that that data is becoming increasingly important because it's becoming visible, and it's becoming embarrassing when it's wrong because it's visible. And in this world, we've got data potentially housed in different systems, multiple currencies, which is clearly a factor in the calculation, and multiple languages if you've got a European or a worldwide portfolio. And whereas in real estate, it tends to be, unlike some of the other areas which have systems which have a very large volume of data with a relatively small number of transactions. If you think about that in terms of accounts payable for finance systems, in property, we've got a very, very wide range of data sets. So it may not be particularly deep, so you may have thousands and thousands of leases, but you don't have millions and millions of leases, so there's not a particularly deep data set, but you have to do these calculations. As I say, you have to have a pretty wide data set, and that's not necessarily easy to gather. So that's it for me. I'm now going to pass over to Paul, who's going to cover his element. And because I'm an accounting firm, I have to put one of those up, and you have to read the small print and digest it.
All right, thank you, Andrew. Okay, so I'm Paul Gatland. I work at IBM in our Watson IoT division, and I specialise in our Tririga product, which is what we'll be talking about today. Excellent. Right, so as Andrew mentioned, a lot of organisations just aren't really ready for what's coming along. And we, as IBM, funded a survey recently, and this is probably going back 12 months. So I think Andrew's data is a little bit more accurate than this one. But at that point, 92% of execs said their company wasn't prepared for the forthcoming changes. Many expected to have over 1,000 leases to bring into the system somehow, and also the debt equity ratio would worsen, which obviously is the case. I think one of the things with IFRS 16 is that it's been mooted for a number of years, and each time that a date's been set, it's been pushed back. So all of a sudden now there's a fixed date, and organisations are now realising that the date's not going to change. So certainly as IBM, we're running around at the moment talking about IFRS 16, both directly and indirectly driven conversations. So it's certainly very active for us. And there we go. In terms of who's affected? So normally, TRIREGA is a real estate system, typically, and so we would be meeting with heads of real estate. The most recent meetings we've had, it's all around with finance. So this is very much of a finance-driven issue. Typically, IFRS 16 will be owned by the finance teams. Real estate is affected, typically because most of the most of the leases, the complex leases, are going to be associated with real estate, apart from obviously asset leases, which are affected as well, and IT, because again systems would need to be looked at as well. We've got a statement here from John from FedEx, but also even the Institute of Chartered Accountants at their recent seminar said that spreadsheets wouldn't be sufficient, and you would need an IT solution to address the new rules. So, in terms of what we can do to help, our product TRIREGA, it's pre-built. There's a number of processes built into the system to address the new standards, and this is both the US standard and the UK. So if you're UK only, it's IFRS 16. If it's US, then typically that would be a US GAAP. So, and if it's a large organisation, then you'll have to do dual reporting and report on both. So we've got predefined reports for that. We can also abstract the lease data, and I'll come on to that in a moment in terms of what's involved in that. A lot of organisations we talk to just need to be compliant. So, and again, we can provide the tools for that to happen. But also, if you've got that data in the system, then you can make better use of that data by looking at sort of underperforming, underutilised facilities, and ultimately making informed decisions and trying to reuse that data. We've been working with FASB and the IASB folks for pretty much since the standard was first announced. So my chart here goes back to 2015, but we've been working with them before that as well. And each time a change has occurred in the standard, then we've reflected that in the software. And our most recent release, we've got sort of journal entries, reporting, and disclosure and so on. And as things change going forward, then we'll also reflect that in the software as well. So in terms of leases, I think one of the big challenges is really getting the leases into a standard format. So typically there's three ways that leases are going to be held. Most commonly they're on paper. They could be on PDF, which really is like electronic paper, or most recent leases they're actually in digital format. If they're in digital, that's fine, and we can bring that into the system relatively easily. If they're PDF or if they're on paper, then there's a number of ways. So it can be manually abstracted, or we've got a product called DataCap, which can cognitively, intelligently look at the lease. We've scanned the lease, and then we can extract certain information from that lease, such as the dates and the key elements to bring into the system. It still requires an element of manual checking, although it will take a lot less time than doing the whole process manually. We work on the basis that even if you bring a paper lease into the system, you're still looking about an hour per lease to thoroughly check it. So if you had 2,000 leases working on 8 hours a day, that's about a year's worth of work for one person. So if an organisation's got 4,000, 8,000 leases, all of a sudden there's a lot of work still to do. We've got the TRIREGA system sitting next to DataCap. So this is really how, and as Andrew mentioned, the lease accounting engine. So this is how we would store and maintain the data within. And we also then link to the general ledger system, effectively the ERP. So that's typically the SAPs and the Oracles. And then finally, just around some examples. So we've got three here, quite similar, all three of them. So they're both sort of US, UK, international organisations. So we've got a fast food restaurant. They undertook well, in fact, are undertaking, I should say, a global lease accounting project. So that was actually driven from the US. It's in the UK and throughout the rest of the world as well. So that's using, it's ASC 842, which is US GAAP, and also IFRS 16. And importantly, that was actually delivered by Deloitte. So IBM, apart from delivering directly, will also work through partners and using Deloitte for that overall project. We've got an international coffee house, you may recognise by the colours. And again, that's a similar thing. So start off in the US, rolling out into the rest of the world as well. But they've got 18,000 stores. So as a minimum, they've got that number of leases plus equipment leases on top of that. And then also we've got a supermarket chain as well who are rolling out US and UK. Retail tends to be quite affected purely because of the number of leases. And from our experience, the two biggest sectors are oil and gas and retail, purely from the number of leases. Although dependent on the organisation, that can be affecting a load of other organisations as well. So that's really all I had to say on this. So very happy to open this up for questions now.